Hey everyone, this is Ryan Mallory for SharePlanner.com doing another session of LiveCharts where we go over the general market direction followed by the stocks that you've asked me to go through too. So with that said, let's go ahead and jump right into the S&P 500. I got the 5-minute chart up here for you to look at. The market action that we're seeing today very similar to what we saw on Friday. Notice on Friday how we dipped lower and then we consolidated for about 2/3 of the day. Let's say about half the day we consolidated, and then in the last hour of trading we saw this huge surge into the close. Very similar price action today as well. You got the huge sell-off and then the consolidation, with it only difference being is that this one was consolidating slightly higher. This one is consolidating slightly lower, but as we speak it's making a decent push back up to the highs of this consolidation range. So just so you could visualize it a little bit better, I will put a box around this consolidation area so you can see exactly what I'm talking about. And by the way, I try to keep these videos under 15 minutes so that they're as brief as possible while being able to still hit all of your charts. This consolidation range, once we break out, I think we could see somewhere in the last hour and a half where we make a push towards break even on the day. When you see this kind of action where when we dip lower early in the morning, establish a lows, consolidate, and move higher, what that's telling you is that there is a bid underneath this market to constantly buy up any and all dips. That's why, even though I don't feel entirely comfortable with this market right now, it is plainly obvious that the buyers continue to buy all weakness of all types. And since that's going, I'm going to continue to keep going long in this market. Right now I have 4 long positions and 1 short position. We issued a trade alert in the splash zone earlier today for a long position as well. Let's go ahead and dig right into your charts here. Well, before I do that, let's just go ahead and look at the SPX on the daily real quick too, and you can see here that even though we've pulled back for 2 straight days, the one on Friday was hardly anything. And then what we're getting today, we've already, regained half of our losses from this morning. So even though we're in the red, it's still bearish price action that we're getting, just simply because there is a bid underneath this market to keep buying it and moving it up higher. Okay, let's look at MU. And the request for MU is whether we should buy this one on a pullback. I think it is worthy of a buy on a pullback, and I'll tell you why. You have a very strong price level of support here. You got the breakout. Now, I wouldn't have bought the breakout even though it would have worked out well, but at the time you couldn't have known that. But see how it's moved up from 611, basically 611, all the way up to as high as 769. That is a major gain. So you don't want to try and get on the long side there right now. You want to wait for the pullback, just like it was suggested in this particular chart request. When it does that, then you want to try and get in back on this re-entry price if it is at all possible. So 689, 690, that's where you want to try and get long at. It's really not unforeseeable that could happen. Let's put a Fibonacci retracement level on it and see where it coincides. You can see this 690 level coincides almost right on that breakout level. So that adds further proof and support that that's the price area you want to target for an entry on this stock. And as far as stops, I would probably, if I got on at 690, probably put my stop somewhere around 672, 673. VNO as a long setup, I like it. I don't like the fact that it's a REIT, but I do like the price action on the stock. Clear level of resistance overhead that it needs to break through before getting long on, but once it does, I would say the entry price is 82.27. Put your stop, I would say put your stop at 80.45, so right below this whole consolidation area. consolidation area is very nice. I like that. I wish this wasn't a REIT because I tend to trade REITs in a very bad way. I mean, I've been successful trading them in the past, but just not as consistent in booking gains as I would like to when trading our REITs. So it's got a nice box there. Just needs to break out. 82.27 is your entry price. Stop loss 80.49. I would look for it to possibly make a move up to 85.47, but I wouldn't hold this thing forever, as these REITs can get very quirky, as you can see from the price action in November. Let's go ahead and look at ALJ. I like this stock as well. What you have there is a bull flag, and when I talk about bull flags, it's a huge price surge higher followed by a consolidation. So it looks like a flagpole with a flag hanging on it. That's why we call it a bullish flag. And so usually the bullish flags have like a slight decline to them, and with that, keeping that in mind, you could say that this thing is already broken out of the bull flag pattern. And your ideal entry would have been 1765. It's about 1783. The closer you can get into around 1769, that's where I would try to target an entry at. So I wouldn't go chasing it quite right yet. Volume looks pretty good. It's been increasing of late. Consolidation shows that there's been some people buying at that point there. So look to get long, somewhere around 1769 if you can. I mean, it would have been nice if we could have got in on the breakout around 1760. But, if you can get in 1769, I would think that would be a pretty good opportunity. I would place my stop loss at about 1706. Now, moving right along, GNRC. We had talked about this one before as being an ideal price pattern. I mean, I love the price action on this stock. I really do. Think it looks great. You got a lot of things going for it. It's broken out of the box. It retested that support level there, and it's been moving up since then. So there's not much to dislike on this particular trade. So I would just try to continue to move up your stop loss. I wouldn't. It's trailing the 10-day moving average quite nicely, just from a open and close standpoint. But the problem is that intraday it is dipping sometimes below it, so that's not really where you want to make your decisions based off of. But you can see here, if you put them below the intraday lows from the past 5 days, I think that provides you a good way to get out of the stock if it starts going against you. So for now, I would probably put my stop loss at 34.05. Gives you a few percentage points to work with there, and if it moves up higher, maybe tomorrow, if it can bust through that 36 level, then maybe put your stop loss at around 34.45. The only thing I would say, be cognizant of that there being some price resistance at the 36 price level, just from this previous resistance level that was formed. It's a minor resistance level, so nothing I would get too overly worried about, but one I would keep in mind nonetheless. AVG. All right, this one looks like a very distributive pattern here. Though you've indicated that you're long on it, you can see here it's pushing below the 10 and the 20-day moving average. You got somewhat of a triple top here. One peak being here, second peak here, third peak right there. I would definitely not hold on to this thing if it breaks below 15. If this thing breaks at any point below 1540, I would get out. So that's the perspective you want to take on this trade. Obviously, everything changes if it can, close above 1625. So it's in the middle of that range right now that I just identified for you, but I would say it's starting to look distributive at this point. EVER. And sometimes too, folks, one thing you want to keep in mind, stocks change from day to day. So what's bullish today can be bearish tomorrow, and bearish today can be bullish tomorrow. So charts could change from day to day, and you gotta realize that. If I've had it before where I talk about how bullish one stock looks today, and then the price action the next day is just so completely different that it actually looks bearish. So one of the key points in trading is that you're flexible enough to be able to recognize that and make the necessary adjustments as a result. EVER still like this trade a lot, but I want to see it get above 1520 before I consider it a new long position in it. We traded it before. I would like to trade it again, but it needs to get up that 1520 level. Since you're considering getting into it, I would wait till 1520. The stop loss on this trade is probably going to need to be around I would probably say something like 1463 initially. If you need something tighter than that, then maybe 1473. Maybe go with 1473. You know what? Scratch that. Let's go with 1464. So that's probably your ideal stop loss. But wait till we get to that 1520 level first. I think you'll be happy you did if you have the patience for it. RGC. Great breakout. I like the breakout from an initial standpoint. The problem is that it didn't give us much more after that. It has sold off from the peaks. It was trading at 1460. Now it's down to 1436. That's a bearish candle, aka bearish or breakout head fake. You have a couple of options on this particular trade. You can wait for it to see what it does tomorrow. Or you could just put your stop loss. You know, if for instance, if it gaps down tomorrow, no matter what, I'd probably get out just because you will have this bearish island reversal with a nasty bearish candle there. So I would definitely get out at that point. Otherwise, if it can hold on to this trend line, you might want to try and stay in there. So tomorrow, that trend line would be at, assuming it doesn't gap down, 1421, and just try to see if you can keep riding it higher. BA. BA, I see this double bottom that was formed and the subsequent breakout thereafter. I don't see much after that. You could say that if you could get in at 74.88, which is a couple percentage points away, that would be your ideal entry point. However, I just don't see anything that really excites me about that stock. BBBY. And this one's as a short here. We've got about 2 minutes left here, but as a short, you would have to be a believer that this thing is getting ready to make a new leg down like we've seen a number of times in the past. I wouldn't let my stop loss drift any higher than 57.71, so that's going to give you a little bit less than a 4% stop loss on the trade. If you're going to get in, I would get in now at around 54.94, between 55.85 and 55.95 is where I would try to get in as my entry point. Stop loss, like I said, no greater than 57.59. Your target, I would probably try to key this old support level that I've watched in the past at around 53.24 as my initial one, and see if it can break lower than that to 49 or so. BBY looks fine too. IOC. A nice little cup and handle pattern here. Dip lower, smaller dip lower, breakout. So I would say current price action offers a great opportunity to get long on it. I'm not necessarily saying I'm going to get long on it, but it definitely doesn't look bad at all. Stop loss is a bit of a problem because ideally I'd want to put that below 56.77, so that might be a little bit more risk. $3.50 is a little bit more risk than I'd probably want to take on. $4.50 actually. So I like it. I just don't like the stop loss that I would have to use on it. INFA. Bullish breakout. I think the move has been made on that, so you want to not hold on any further than that. FTK. Finding resistance at the highs here. I would wait for it to break above 13.12 1224 before getting long and put a stop loss at 1277.